Hello and welcome to Unblocking the Chain. I'm Ash Cooper, and today we are talking about the exciting merger between Trovio Asset Management and JellyC Digital Asset Management. I'm joined by Jon Deane, CEO of Trovio.
Hey Ash, thanks for having us.
Thanks for coming, John. And Michael Prendeville, CEO of JellyC.
Great to be here, Coops, and g'day to all the listeners out there.
Welcome back, Michael. Michael, can you tell me why this amazing transaction with Trovio is strategic for JellyC?
Coops, I'm very excited about this transaction. It gives us a lot of scale in terms of we increase our assets under management. We get some fantastic staff members that have come with the entity. We have a presence offshore. At the moment, we're domestic. So for our community to be able to invest in offshore vehicles and for us to be able to take money from offshore investors is a big win. We also get a track record, which is much more significant than the one that we have at present. We started in 2021. Trovio Asset Management launched their first fund in 2019. Okay, so the infrastructure that we get from this transaction is terrific. Okay, we pick up a license in Singapore. We pick up a license here in Australia. So I guess if I had to identify one of all of those attributes, it would be the terrific team that we're getting.
Great. Yeah, no, it's exciting times ahead. And John, for Trovio, what was the strategy for you guys to merge with JellyC?
Well, Ash, Trovio is a diversified business. We've got a technology business in licensing a private blockchain solution called Core10x. And then we've had our asset management business, which has been around, as Critter mentioned, since really 2018. And anyway, so over the last really 3 to 5 years, our technology business has been continuing to scale with increasing adoption of, in particular, private blockchain solution for environmental assets. And with that growth, we've had to really focus our attention around where we allocate internal capital. And we saw JellyC obviously being an Australian operated asset management in the exact same space with the same ethos as us. And we thought, listen, this is a beneficial aspect for our LPs to get the exact scale around the assets under management, have increased, obviously, expertise in the space. And, obviously, from a professional outfit, from a growing assets under management, from a growing knowledge base, I'd say, with all investors globally, we thought it was best positioned to really combine those two businesses and look to scale them, in what I believe is a pretty exciting future.
Yeah, no, obviously we're on the same thought process. I'll get back to the other business you talked about because it's very interesting. And Chris, is there anything? I mean, obviously the staff in any business is amazing. Just talk a little bit about the licenses and allowing JellyC to probably offer more product to offshore investors.
Yeah, so being licensed, I guess it's a credibility thing. Having a license, not just in Australia, but also to, have a license in Singapore, it really stamps us as someone who is an entity that is dotting the I's and crossing the T's. When we walk into a room and they want to see our credentials, first and foremost, that's the thing that we say. There's a lot of entities out there in the space that are not regulated. To have 2 licenses, well 3 now, is something we can, we're proud of.
Yeah, makes a lot of sense.
Can I add to that?
Absolutely.
And having been in the space for quite some time, I think it's a really valid point, right? Like the investor base you're going after with these regulated funds are obviously sophisticated investors. What you bring to the table with a licensing regime, in particular in Singapore and Australia, is really the robustness of the infrastructure that supports you and the confidence that the managers that are looking after the assets is secure, trustworthy, and obviously going to deliver you, I'd say best-in-class returns.
Yeah, because I think, we're going to quiz you a little bit about your background, but we've all come from traditional backgrounds and, our view is, we should be regulated, right? If you're handling people's money and certainly at an institutional level, licensing and regulation is important. So I think we're all aligned there. So, John, segueing into that, can we have a little bit of a background of how you got here and probably where you came from? Not necessarily Dalkeith in Perth.
Yeah, well, thanks, Ash. No, Yeah, listen, my background's traditional finance, in particular in the commodity space. So I spent close to, I guess, a couple of decades in commodities, predominantly in London and then in Singapore, working for JP Morgan, UBS, and some other banks. My, I guess, transition into this space was predominantly because of my exposure to the physical commodity trade, understanding that, really the characteristics and usability of a blockchain solution could be highly applicable into that area, right, from a disruption standpoint. So I initially got involved with Trovio in its prior state, which was within the Capital Markets Research Centre here in the Rocks in Sydney. That was doing some pretty interesting work around identifying these unique characteristics through the supply chain and developing ultimately what was a transactional system that could be utilized to really take out a lot of the rent-seeking middlemen, right, ultimately in the commodity business. That's obviously evolved significantly from those early days. And at the same time, I was involved in what was a previous, I guess, Trovio Asset Management, which was previously called TCM, but that business was looking at really developing an institutional asset management business, focused on bringing in really institutional capital into this space, getting that trust and belief. Really, it was an education. I mean, I'm sure we all had the same experience. 2018, 2019, you go into the pub and you talk about Bitcoin or Ethereum and everyone would laugh you out of the room, right? You've gone crazy. You used to be an MD at an investment bank and now you're talking about this sort of asset like it's investable. That's obviously changed, right, materially. You've had Larry Fink, I think, came out in the last couple of days saying that, Bitcoin could be the equivalent of the US real estate market, right, in dollar terms. So I think it's 50 trillion, right, is the number. So, but you definitely didn't have that sort of support back in 2018, 2019. So I went through a journey of really educating people, educating myself, right, really around the technology and obviously what usability could be, knowing from I guess that commodity standpoint, as I explained before. But then as it continued to evolve and the technology, I'd say, has evolved significantly over the last 6 years, and obviously significantly more so over the last 14 years. But it's got to a point now where, we are seeing commercial adoption. We are seeing real world use cases for blockchain solutions around the world, whether it's with private enterprise, not-for-profits, financial institutions, which are looking at leveraging these sorts of solutions to reduce operational risks, take out a lot of the rent-seeking middlemen that are involved in these transactions, and actually just streamline processes. And I think that will continue to evolve over the next few years.
Yeah, totally agree. I mean, I think the one piece of information, you were one of the youngest MDs at JP Morgan, is one of the pieces of info we got in the commodities group.
I don't know how accurate that is, but I was a young MD. Yeah,
I'm a reliable source.
Very reliable. As they always are. I think we obviously all come from banks, and I think you see inefficiencies in banks. It's, the payment systems to T+2, commodities, emerging markets. You see it all the time. I think it's the incumbent system is not as efficient as I think a lot of people imagine. And I imagine, particularly commodities, and then you've got supply chain, either tracking or financing. It adds another level to it.
Yeah, I think with big financial institutions, which we all worked at, is a lot of those systems have become more and more efficient. It doesn't mean there isn't a cost involved with them, but I think back to 2018, 2019, a lot of the blockchain solutions were trying to tackle huge markets, right? They're sort of trying to say, hey, listen, we're going to go disrupt the entire bond market. Sure, okay, sounds like a great idea at the time. The reality was the marginal improvement you could get out of disrupting the entire fixed income market back then was pretty small. So the cost of switching was quite difficult, right? And that was a big challenge for the market. I think what you've seen now is people starting to look at where you can get a real efficiency gain, whether it's a nascent market, whether it's a highly inefficient market like the physical commodity market or private equity or real estate, and you're starting to see that application, whether it's for public or private blockchain solutions, there's different benefits of both, start to be adopted, right? And I think that's where you're seeing that adoption curve. I'm sure we'll get onto things like Bitcoin later, but that's really where I'm seeing, I'd say real world use case, like it actually is a feature, right? It is a real improvement to what was the status quo, not a marginal gain.
Yeah, I tend to agree. And Critter, you came from the the foreign exchange space originally, and then into rates and things like that. But obviously, T plus T settlement in FX, that goes atomic. That theoretically is one of the biggest risks to the foreign exchange market. It's T plus T.
Yeah. So, settlement risk is not a risk until it really is. So you're talking about a bank going under and making a payment. Drew mentioned something along these lines in the first episode where Deutsche Bank had made a payment. They'd accepted a payment and then pushed one out and the bank went under. For instance, they were $30 million short. So that's a spot transaction where they'd paid out early and they hadn't received the other leg of it. So, it rarely is an issue. But when it is an issue, it causes absolute havoc. So, going to atomic settlement will be, is something which is naturally going to occur to eliminate counterparty risk.
Yeah. So let's segue into Trovio today, John. Could you just run us through what you guys are solving now and how you see that going forward?
Yeah, it goes a bit to my answer before. We have a private blockchain solution called Core10x that we license to various different organizations around the world. What that is focused on is predominantly environmental markers or energy transition assets, where there is a large amount of unique data associated with a physical asset, right? So say you're looking at a molecule of energy which has all these different types of environmental properties, and those environmental properties actually drive the value of that molecule of energy. Sounds complicated. It's not that complicated. Ultimately, it's a token, right, with lots and lots of details that need to be captured throughout the supply chain. And we capture that for things like the energy transition when you're looking at future fuels like sustainable aviation fuel, methanol, ammonia, that require that information to demonstrate people's climate actions, to demonstrate the different types of steps that these organizations are taking to ultimately meet their net zero goals. And so that's where we've been sort of getting, I'd say, a lot of traction with Core10x. Similarly, in the carbon markets, we're looking and we license this technology as a registry solution. So once again, it's capturing all these unique characteristics, creating transparency and trust, right, into the registry. And if you think about a blockchain, every single transaction needs to be signed, right? And you have a cryptographic key that needs to sign a transaction. And ultimately, having every single transaction signed, not just transfers, but obviously adding attributes, retirements, creates a completely auditable history of everyone's actions directly within the registry. That creates trust. Now, when you're selling a product that is a pure data pack, it's not a physical bar of gold or a sheet of aluminium, the most important thing is trust, right? And so having that trust in the registry solution for our clients is what they need to deliver to have a highly efficient, integrated and interoperable market for these nascent assets.
It's amazing. And do you think, again, I'm not an expert, but does this make it easier for the authorities, whoever that is, because it's on the blockchain, it's verified data, to approve, people doing the right thing?
We're a private blockchain. So when we license that private blockchain, they approve who can interface or write any form of transaction to that chain. In most instances, there might only be one node, right? So if there's only one node, there's only one person writing transactions. So there's always a trusted party to that. The value proposition, to really my point before, where you see the application of this solution is that, one, it's obviously built API first and how you could obviously integrate with other solutions, even public chains. But more importantly, it's around creating that robustness of the database, right? A blockchain is a database, right? And so how you storing all this data is completely irrefutable, right? And having that irrefutable history is a huge value proposition and something needed in these markets.
So I've got a question. So JD, is there any chance that the verification process would be outsourced? So, think of Eigenlayer, for instance. Mm-hmm. Is there any chance that, you'll outsource the node process?
It'd be up to our clients on that type of process, right? So it depends on who we're dealing with and the type of client in regards to that. There is the ability for data to be written to the chain by outsourced providers, and that could be via API integration as well, right? Because you can have data packs, for instance, coming in and writing transactions on a permission structure. So you could have various different permission structures within a database registry blockchain that allow people to write to that. But ultimately that is controlled by a single node that is approving that permission structure as well.
Yep.
Or you could, as you said, you could outsource it as well. So we're a SaaS business, like Trovio Technology licenses this, so we are obviously dictated by our clients' constraints.
Yep.
But as you know, I do think the market evolves, right? I think in the same way technology evolves, you'll see more and more improving solutions to create that interoperability.
Can the Trovio platform be extended out to all commodities?
Definitely, yeah. And we are doing that across other commodities. So we have a strong view that all commodities, and this is back to part of the reason I got involved in this space, that we're actually going to decommoditize commodities, right? We had this idea, 40, 50 years ago that we industrialize the commodities trade around, every single soybean's the same, every single sheet of aluminium's the same. What that has ultimately done is we've commoditized everything, which is fantastic, right? When we have this great global trade, but we're sort of stepping back from that now, mainly because of climate change, and we want to understand of, for instance, farm to plate beef, right? You want to understand what are the environmental properties and other characteristics of the aluminium that went into your Tesla, right? Now, if you want to capture all that information, what you're really doing is you're decommoditizing them. You're actually creating differentiated assets, and a blockchain or a token is a perfect use case to have a serialized batch, right, of every single itemized product that could compile a finished product. That could be a building, it could be a car, it could be anything. And there is legislative requirements, like EU CBAM, that are coming into place that I believe are going to accelerate that.
That's very interesting. So, I mean, this obviously the breadth and scale of client potentially is huge, right? It could be, as you say, some of the heavy commodity guys, but it could be, the people that export milk powder or beef, and the end buyer wants to know where that product has come from, and it hasn't been sitting in a warehouse for 2 years and all this sort of thing.
Yeah, I think if you go back in time, like back to my JP Morgan days, Europe's been on this journey for a long, long time, right? So in the, they haven't taken genetically modified crops, right, for more than 20, 30 years, I think it is. I don't know the exact date, but definitely the time I was trading agriculture. And as a result, you think about that, they're sort of saying, well, you're differentiating one soybean from another, right? And so they're saying no GMO. Then we move to this instance of, let's say organic produce, right? Farm to plate produce, understanding the supply chain. All of that is chain of custody, right? And all of them are fantastic use cases for blockchain, right? And you are seeing a lot of blockchain projects spin up as provenance solutions, which are actually decentralized solutions. There's other chains out there. We talked about it before, like Hedera, who are doing a lot of stuff in this space as well. And I think that's because of really my original point around this is you're not trying to tackle a highly established market. It's a real use case. It's something that the market actually needs today, right? And you're not trying to disrupt an incumbent technology. And so I think we are making real strides in this space, and it's only going to get bigger.
So, JD, I've got a question. Australia's biggest exports, iron ore, coal. Can we see that on your platform?
I don't think you'd probably see, it depends. So I don't think you'd see something like thermal coal on our platform. Iron ore, definitely, right?
Different grades.
Met coal, different grades. If you think about, say you're extracting iron ore, what is the machinery you're using? Are you using electric trucks, right? What was your diesel consumption? What's the nature impact you've had, right, on the sites? All of them are attributes that could be captured in a token, right? And so if you uniquely serialize an iron ore export with all of those details, including whatever the track system that was on, the shipping fuel that was used. You want the green fuels as you're shipping. What are you doing, right? And you're capturing all of those components. Then you have a data enriched iron ore that could trade at a premium, right, to ultimately to, I guess it's a smelter, right, that who would buy met coal and blend it and turn it into steel. Because when they're selling that steel, they know, hey, listen, we can definitively, with an irrefutable record, demonstrate that the iron ore that went into this, right, is green, or greener than other iron ore from other mines.
Yep. And so on the platform, I guess another question on the liquidity side.
Mm-hmm.
Can you run us through how that works? So outside, you mentioned about the AMMs.
Oh, yeah.
Perhaps give the listeners a bit of a sense of how that would work.
Oh, we don't operate in the AMM space, so we're not a transactional platform per se. Can transact like Cortex can do transactions, but it's not a marketplace, right? So it's not it's a database in its essence. And if you're going back to the mining space, if you're looking at the major miners in Australia, they could use it as their own inventory system.
Yep.
Okay. So a replacement for the traditional spreadsheet, a replacement for the traditional risk systems out there, which we've all used.
Yep.
This is a new age infrastructure to support that. For an AMM, could they make their product available into a decentralized marketplace using our technology? Definitely. That would not be on our chain. Obviously, they would be moving those assets effectively through our technology into a public chain that could be made definitively into a decentralized marketplace for these assets to trade.
Yeah.
And so that's obviously a journey another firm can take and build those solutions. It's not really where we play.
So you talk about chains,
Mm-hmm.
and there's lots of public layer one chains out there. For instance, good examples are Ethereum,
Mm-hmm.
Solana, etc. They have some awfully big valuations.
Yeah.
Does that mean that we're, looking at Trovio technology and will there ever be a listing of the chain? I know you've said it's private, but is there any point where it could become public?
Oh, it's not currently in the roadmap to do something like that. I think there's use cases for both public and private is my view on this space.
Yep. And
I think, to your point before, one of the big use cases in particular for public chains is decentralized markets, right? I'm a big believer in that. I'm a big believer in the idea of AMMs providing liquidity, in particular into illiquid assets. And in like physical commodities is a great example of that. Even if you think about lots of the different variables and data points that can be contributed into the commodities market, something I've often talked about is the agricultural sector. And it's a little bit close to my heart. And, if you want to look some other dirt up me, I also have a farm. And, agriculture in Australia is a really interesting space in that you have all these farmers that have huge amounts of data, right? Huge amounts of data on, their 100-acre farm, or even if it's a 5,000-acre or 50,000-acre farm, right? And there's more and more solutions coming out which are non-blockchain related, but data capturing, sensors and all this sorts of stuff. Now, their data by itself is not worth much, right? It's not worth much. They can't really sell that data to anyone today, but there is definitely abilities, and blockchain is a perfect way to do this, in my opinion, for ultimately the ability of like a decentralized YouTube. You take the rent seeker out, right? So the aggregate of all that data can be hugely valuable, right? Hugely valuable from a trading standpoint, hugely valuable from a government standpoint, understanding the landscapes, from a climate standpoint, understanding what's actually happening across all these different different locations around the world.
Yeah.
And if we could remunerate these farmers for this data, incentivize them, right, through tokens and other types of issuance programs, it could be a really great way to really take out or monetize, create GDP, right, for something that's not currently remunerated for, and create a whole new system, right? And that's things where I think public chains, decentralization have real applicability in the near term. Obviously, that requires I'm sure we'll talk about stable tokens and all this sorts of stuff as well. But like all of that requires the necessary infrastructure to support it.
Yep.
And back to 2018, a lot of that didn't exist. But whether it's digital wallets, the correct sort of regulation, stable tokens to actually be able to convert and be able to be spent. All those things are, things that need to come.
Yeah.
Probably the most important question, what are you producing on the farm, JD?
We're a cattle and sheep farm. So we
So just for a simple person like me, so essentially, the rent seekers, so someone in the UK wants to buy Aussie beef.
Yep.
They essentially, because of the YouTube and the database, could go, I want, the specifics that JD's growing.
JD's beef,
essentially, and click the button. Now, logistics and stuff all have to be automated, etc., as you alluded to. But essentially, you could get what you're ordering rather than sort of hoping what turns up.
Sort of. So there's two streams on that. So one's the farm to plate, which is what you're referring to there, Ash. So like that can be irrefutably solved with effectively a proper blockchain solution, right? And that means that if you go to your local Harris Farm store and you're buying your beef and it says it's carbon neutral or whatever it says, right, it's from an organic farm, X, Y, Z, you really have, as a producer, very little reputational risk or operational risk of making that claim, right, on things. So you don't have all the sort of greenwashing associated with it, one. Two, as a consumer, you feel very confident that what you're buying is what it says on the tin, right? Like highly confident on it. So that's one thing. The thing I was referring to about data before is more around like, your heating degree days, right? Your rainfall data, right? How many animals you have on the property, which, as an individual, that data is worth zero, right? Like you can't go sell that data, but they're collecting it today. So if you could, I think often the example that we talk about in blockchain, I'm sure there's things like this already happening out there, but like if you think about YouTube, right? Or if you think about any of these sort of social media platforms, that's a rent-seeking intermediary, right? And they're monetizing that through advertising and other types of mediums. But if you could actually remunerate the content creators directly, right? So media effectively pays directly to the content creator, right? Because they're using that platform, right? Then you don't actually have the YouTube middleman sitting there, which the technology exists to do that, right? And I'm sure it's been done in very much sort of beta testing already, but that's what I mean at the farm level. Like that sort of system could work today, right? And I don't think the farmers would know how to take an airdrop of tokens or whatever it would work out to be, but it's there to be done.
So it comes back to, my data, farm, pay me for it, right? And if it's a collective, it's very powerful. If it's one by one, it's worth nothing.
Yeah, your data's worth a lot, and but you can't sell it today.
Yeah.
Well, actually, we have a lot of sophisticated farmers now.
Mm-hmm.
So, and we've got quite a few that are invested in crypto. So, in terms of airdrops, JD, they might be able to take something from you.
Yeah, no, it's interesting. And so, the other question I had is obviously, private for the time being, but the users of the data who want verified data for the Trovio product, I mean, essentially, regulators / investors would like to see that data at some stage as proof, that these companies are doing the right thing. It's clearly becoming more and more relevant.
Yeah, definitely. I mean, listen, all these companies get audited.
Yeah.
Right? So they all have various different audit programs over whatever claims they're making. What we're giving them is the ability to actually demonstrate to the auditors that they have been compliant, right? And so a private blockchain solution enables that, right? It solves their problem, definitely. And back to that sort of, signing transactions and irrefutability of all sort of actions within the chain. Do they make this data publicly available? That's their decision.
Or does a government, adopt your technology essentially?
Yeah.
As it becomes more, I'd say transparent.
Well, I think it's on the public record. Like Trovio is the provider to the clean energy regulator here in Australia, right, of Core10X, as the registry solution for effectively the Australian carbon market. And so it's doing exactly what we talked about before. It's effectively a database used by the government, right, to manage the ownership transfer of carbon credits in Australia, right? And so it's solving that problem, which is giving the transparency, auditability, irrefutability of a very complex data set but also giving them all of the interoperability, so API connections into the relevant marketplaces these assets need to trade on.
Amazing. And so, I mean, by the sounds of it, it seems could be a fair bit of scale across the globe, to be honest, as other governments start to
and
adopt
it
this.
comes back to my answer, I guess, at the start was like, when we looked at, obviously when we started with Trovio and we had a diversified business with Trovio Technology and Trovio Asset Management, we have a long history. Our technology team has a long history, entrepreneurial history, right? The tech team previously was built a business called Smarts that was actually sold to NASDAQ, which was the leading market surveillance solution in the world when it was sold. I believe it still is. I think it's still one of the largest revenue centers for NASDAQ as well. And so, we started that business, but like all tech businesses, right, they take time to evolve. They take time to build, time to scale. Sometimes you're too early, sometimes you're too late, right? And so we had this diversified business, and we also built to the licensing points, that Critter was making before, an institutional asset management business. And we built that business for the same reason, thinking, listen, there will be commercial adoption of private and public blockchains. We believe that this will disrupt infrastructure globally. We do believe it is a viable technology. We don't think it's going to do everything and anything, right? Like, that's not our belief, but we do believe it has such a large TAM that, it is a truly investable asset class. So we built this institutional asset management business with all of the bells and whistles and the infrastructure, because at the time there was a lot of, I'd say, and still is, but there's still naysayers out there around how this technology will actually ever have a commercial use case. So we built all of that to support it. Now, ultimately, our technology business has grown considerably. And, back to the merger and then pulling these businesses together, it was like, listen, who can we identify as, is a fantastic operator, look after our LPs and all this sorts of stuff, has the same vision as us, really, right? Is aligned to where we believe this market can get to. And, that's why we think this sort of, this merger is a fantastic opportunity.
Thanks, JD. Hey, I've got a question for you. And, it's one that I really brought up with Menas outside, but what does success look like for Trovio Technologies in the future? Where do you see yourself? Where are the stretch goals?
Well, listen, we don't think there'll be just one infrastructure, right? For the entire global commodity market. I think that's unrealistic. I do believe you're going to see a material rewrite of technology infrastructure for, the broad commodity markets, particularly in the developed world. Obviously, I think energy transition assets, environmental assets are the leader in that because they're nascent markets and actually they are data-enriched assets and they need these solutions today. So, my view, my vision, my dream of where Trovio Technology is really getting in at the early stages of this movement, which I think is inevitable, and being the foundational infrastructure to support it. Right now, I think there'll be other participants that will look to try to catch up to where we're up to. But I think the pendulum swung. Right, one, this is the technology for this. Two, the market needs to now understand what it is consuming.
Yeah.
Right. We can't live in this world anymore that, we assume everything's commoditized because it's not.
So it's, so when I first started in banking, and I was on the currency side, we went from, taking manual journal entries to, having the electronic systems. So it's the equivalent of, Reuters or EBS, or something in that ilk, and how it changed. I'd changed the currency market, back in the 1990s. That's the equivalent of what Trovio Technology.
I think a good analogy, for that is, you're probably aware of this, Critter, but JP Morgan, I think, was the leading FX spot provider in like 2001 or 2000. And one of the innovations in the FX spot market was obviously electronic markets, right? Like
ABS.
Yeah.
ABS.
And so, they decided not to adopt it, right? They decided not to go down the electronic route, and they, I think, went from 1 to 8 or 9, right? I think that was something like that. You'd probably know better than I would. And that's because they chose not to adopt technology, right? They sort of think that, hey, listen, the way we do it today is the way it will always be done in the future. And I think that's exactly the case for the global commodity market, right? Is that, and I think what you're seeing is, with climate change, with the energy transition, there are, and I don't know how much your listeners are abreast of it. If you say a lot of large farmers, they're probably quite interested in this, but, sustainable aviation fuel, green shipping fuels, all these new types of molecules of energy that are going to be consumed over the next few years to actually make real reductions in emissions, they are going to be a big driving force of understanding, your supply chains, understanding the environmental components that went into it, right? So that you don't end up in this scenario of reputational risk, greenwashing, other types of potential litigation against some of these companies that would need to participate in the space.
Yeah.
I think it's such the comment you said before, JD, about everyone needs to know what they're consuming. I think is such a relevant point, isn't it? I mean, from the water, the food, clothes, everything. It's everywhere, right?
Yeah. Well, and sorry to consume so much of your podcast, but
No, it's all about you.
Listen, back to the sort of where I think the world could probably get to. We're sitting in this building today doing this podcast, and in the future, probably not all buildings are equal either, right? Because, if you think about even, requirements under various different emission reduction schemes where you have to abate your emissions, right? Now, if you have developers that build greener than other developers, right, that building should trade at a premium, right, to the building that doesn't, right? And there's a reason it trades at a premium, because the building that doesn't has to buy carbon credits or other types of abatement mechanisms to offset them. Now, how do you understand what went into that building? Now, listen, this is a long way down the track because a lot of the supply chain would need to be mapped for this. But, that's what I think the world could ultimately get to.
Yeah, it's interesting, isn't it? Yeah, yeah. I mean, I think either regulation or investment flow of money is going to dictate that, isn't it, in reality?
Yeah, definitely.
No, it's very good. Very good. Well, JD, thank you very much for your time. Really interesting. We could sit here all day. We'll put all your contact details. We certainly have investors that would be interested in this, whether it's the farming or manufacturing. There's lots of interest. But what's the best way for people to get hold of you? LinkedIn?
Yeah, LinkedIn. Obviously, via you guys, is TikTok. Yeah, you can check the TikTok account.
Menace.
I think we were all from the wrong generation. TikTok.
Critter thinks he's not.
I'm on TikTok. I'm lawn mowing on TikTok, and it actually got a hell of a lot of hits. Yeah. And I do have my shirt on, Jada.
Why did you decide to film that?
No, it was Howdy daughter that was doing a clip, and she just happened to get me in the background doing the lawn mowing.
Yeah, right.
Would you believe?
Yeah, no, listen, obviously, we'll be working closely with you guys, and, we can definitely touch base with that.
Yeah, great. Chris, thanks for joining again.
Coops, always a pleasure.
Really looking forward to working with the Trovio and JellyC teams going forward. There's a lot to do. Thanks for joining.